The tokenization boom is often described as the next big thing in finance. Many investors believe it could unlock trillions of dollars in value, with tokens like Ethereum and XRP standing at the center of this transformation. In fact, just recently, Bitwise suggested that buying ETH and XRP might be the cleanest way to invest in the tokenization trend. But not everyone agrees. Pierre Rochard, CEO of the Bitcoin Bond Company, has publicly rejected this idea, and his reasoning cuts deep into the very foundation of how people think about blockchain's role in finance. So let's break it down. Rochard's main argument is that the financial system already works. In his own words, the Depository Trust Clearing Corporation, or DTCC, already solves the problems that Ethereum and XRP claim to address. The DTCC clears and settles securities as a cooperative owned by its users. In other words, institutions already have a system that is cheap, efficient, and widely trusted. So why would banks, brokers, or funds abandon a proven infrastructure to adopt a blockchain-based model that, as Rochard puts it, burns fees to inflate token prices while still leaving operational costs in place? For him, the so-called pitch to institutions is, quote, dead on arrival. Now let's pause on that. Rochard is not saying tokenization itself has no use. Instead, he's questioning whether tokenization actually benefits XRP or Ethereum holders in the way many expect. And his criticism gets sharper when he points to competition. He reminds everyone that blockchain technology is open source. That means anyone can build new networks, push fees lower, and undercut profits. The contest, in his view, is not about real utility. It's about marketing. And when it comes to adoption, he highlights that stablecoins like Tether's USDT on Tron already dominate. In a follow-up commentary, Rochard made his stance even clearer. He wrote, increasing the utility of security tokens may marginally increase the demand for holding security tokens, but it has zero effect on demand for holding ETH or XRP. For him, there's a whole segment of the crypto industry, as he says, dedicated to not understanding this. But here's the twist. Even though Rochard insists tokenization doesn't help XRP or ETH, the DTCC itself is already experimenting with Ethereum. In April, the DTCC announced its Great Collateral Experiment. This included a tokenized collateral management platform called AppChain, which runs on LF Decentralized Trust's Besu platform, an enterprise-focused version of Ethereum. The idea is to speed up collateral movement, improve liquidity, and create an open ecosystem for digital financial applications. So here's the critical question. If the very institution Rochard cites as proof that Ethereum isn't needed is already using Ethereum in its experiments, does that weaken his argument? Or does it actually prove his point that institutions can use blockchain without needing to hold the underlying token? After all, if Ethereum's enterprise version is being used by DTCC, it doesn't necessarily mean investors must buy ETH itself. That's exactly the gap Rochard is pointing to. It's also worth remembering that Rochard is a well-known Bitcoin maximalist. He has consistently criticized altcoins, especially XRP. Back in May, he dismissed XRP as a retail token with little institutional credibility. He even acknowledged that XRP has utility, but insisted that utility alone does not lead to meaningful price growth. For him, there's no strong value accrual model behind XRP, Ethereum, or even Solana that justifies holding them for the long term. His argument is simple. Why not just use the networks for their utility, but keep your money in Bitcoin or stablecoins instead? This brings us to a bigger issue. The crypto industry often blurs the line between utility and investment. Just because a token powers a system does not always mean holding that token is the best way to benefit from the system's success. That's essentially Rochard's warning. So where does this leave us? On one hand, tokenization is real. Institutions like DTCC are already testing Ethereum-based systems to improve efficiency. On the other hand, critics like Rochard argue that this innovation doesn't automatically translate into value for ETH or XRP holders. Instead, the value could remain with the infrastructure users while the tokens themselves stagnate. In the end, Rochard is forcing investors to ask tough questions. Are we buying ETH and XRP because they truly accrue value from tokenization, or are we buying them because the industry narrative makes it sound like they will? That's the debate, and it's one that could shape how people approach crypto investment strategies in the years ahead.